Hello everyone. Today, I'm going to share with you the history of the Indonesian capital market, basically, how Indonesia's stock market began, how it grew through different eras, and how it became what we know today as the Indonesia Stock Exchange, or IDX. We're going to take a little journey through time, starting from the early 1900s during the Dutch colonial period, moving through Indonesia's independence, and ending with how modern technology and financial systems shape the capital market today. Let's start with the early beginning. The story began in 1912, when the Dutch colonial government established the first stock exchange in Batavia, which we now call Jakarta. At that time, the purpose of the exchange was mainly to support Dutch companies operating in the East Indies. It was used as a place for them to raise capital, issue shares, and trade securities, but it wasn't an open market for everyone. Only Europeans were allowed to participate in trading activities. Local Indonesians weren't part of it yet, so it wasn't really a national market, more like a colonial financial tool. However, when World War II broke out, everything changed. The war caused massive economic disruption, and many businesses collapsed or moved their focus to survival instead of investment. Because of that, the stock exchange had to stop its operations entirely. So, by the end of the war, Indonesia's financial system, including the stock exchange, was basically inactive. After Indonesia gained independence in 1945, the new government focused on rebuilding the economy. The early years of independence were tough. The government's priorities were political stability, national security, and rebuilding infrastructure after years of war and colonization. Because of that, the capital market wasn't active yet. There were several attempts to revive it, but those efforts didn't last long. Indonesia was still finding its footing as a new nation, so the stock exchange wasn't the main focus. You could say that during this period, the capital market was like a sleeping system, waiting for the right time to grow again. In 1977, when President Suharto officially reopened the Jakarta Stock Exchange, or JSX. This was a huge milestone in Indonesia's financial development, marking the rebirth of the capital market after decades of inactivity. In the beginning, the market was still small. Only a few companies were listed, and the number of investors was very limited. Most people still didn't understand what stocks were or how the exchange worked. But even though it was small, this reopening symbolized Indonesia's readiness to enter a more modern and open financial era. It showed that the government wanted to create a stronger link between the financial sector and the real economy.
Then came the 1990s, which was a very dynamic decade for Indonesia's capital market. This period also saw the establishment of the Surabaya Stock Exchange, SSX, which aimed to expand capital market activities beyond Jakarta. By having two exchanges, one in Jakarta and one in Surabaya, the hope was to make financial access more inclusive and help businesses in other regions grow too. The 1990s were also the time when Indonesia started adopting more modern trading systems, regulations, and transparency standards to build investor trust. The market was becoming more active, more open, and more connected to global developments. However, as the market kept growing, having two separate exchanges became less efficient. Both JSX and SSX were doing similar things, but managing them separately created duplication and confusion for investors. So in 2007, the government decided to merge the two exchanges into one, forming what we now know as the Indonesia Stock Exchange, IDX. This merger was a major step toward modernization. Today, the Indonesia Stock Exchange plays a vital role in the country's economic growth. It's not just a place for companies to raise funds, it's also a platform for millions of Indonesians to invest and build their future. The IDX is now supported by digital trading platforms, stronger regulations, and various educational programs. One famous campaign is called Yuk Nabung Saham, which literally means, let's start investing in stocks. So to wrap everything up, from its very first establishment in 1912 under Dutch rule, to the post-independence revival, and finally its modern form as the Indonesia Stock Exchange, the Indonesian capital market has gone through more than a century of transformation. It's a story of resilience, innovation, and adaptation.